So it feels like on every single trade you take that the market just magically goes against you, right? And even when a trade is going really well, there's something in your brain that tells you, I need to hold this trade longer so that I can make more profit. And when that happens, you end up losing all of your profit, right? That is exactly what I'm going to fix for you in today's video. I've been trading for over 4.5 years now, and I've helped hundreds of students with this exact same problem. So if you watch this entire video, I guarantee you will change your trading psychology forever. Subscribe.
I want you to imagine this right here. I want you to imagine from now on, to avoid this issue, to avoid, I feel, this position went without me, it went too far, blah, 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 all this stuff. I want you to imagine every trade as a loss, okay? Before the trade even happens, that trade in my head is a loss. So think about it that way. You took 25%, congratulations, that's better than a loss, right? Every single trade I take starts off as a loss for me. That is the way to solve that problem, because like, keep in mind, right? You're thinking about this. You're thinking about your position like this, right? You take your position and you're like, oh, look at all this upside. Look at all this upside. Okay, well then imagine this thing came all the way up and stopped you out. If that came all the way up and stopped you out, then would you still feel the same way? If it came to 25%, came all the way back up and stopped you out, would you still feel the same way? Would you still feel like, I should have held it, I should have held it? Would you have felt that way? No, right? You would have felt like, I should have closed out at 25%. You would have been like, I should have exited early because this thing came out and stopped me out. So my question to you, and you're going to have a couple questions that are going to be posed to you. Things to pay attention to when in a trade. All right. 1, I want you to pay attention to anxiety. And 2, and I'm actually going to call this anxiety spikes, right? Anxiety spikes. And 2, I want you to pay attention to your R multiple. Okay? So those are the 2 things I want you to pay attention to. Your R multiple and your anxiety spikes. What do I mean by anxiety spikes? Well, let me read your message earlier here. And you said, don't know if I should hold. I just have one con, right? That is an anxiety spike. Okay? So if you're like, I don't know if I should hold, right? I don't know if I should sell. And then I asked you, well, how would you feel if this thing came all the way back up to break even, right? Would you feel, whatever, I don't really care, came back to break even, oh well, right? For example, me, I just took this trade here with a stop loss above this candle, or I took it right here, stop loss above this candle, target down to this area at 491.24, but I took my profit here at 491.53. So because I took my profit there, I didn't get the full profit. I got 3-to-1 risk to reward. But at the end of the day, for me, I let the rest of the position go back to break even because I've already made money. I don't care whether or not that position goes to break even or not, right? So that's one thing that you have to ask yourself. Do you care if this money comes to break even or stops you out, right? Let's say it comes to break even and then continues going all the way up and stops you out. Would you be upset over that loss? Would you feel upset over that loss? If you feel upset over it, it's a very good sign that you should get out, right? You should take your profit when you do. So let's say you're let's say you're up $350 on the day and you take one position with $50. Do you really care if that position, goes 100% your way to, 1,000,000%, or if it goes to break even? Not really, right? Because like it's only upside. If it comes to break even, then you're still up $350 on the day. If it goes to the red and you lose 100% of that contract, you're up $300 on the day still. So you're not going to care nearly as much. But for you in that situation where you have a specific size in, you have a specific amount of your account in, you're trying to grow an account, you need to pay attention to anxiety spikes. How would you feel? And ask yourself this question, legitimately ask yourself this question when you're in a position. How would I feel if this went red? Would you feel stupid, right? And this is straight up an emotional reaction, right? I'm trying to literally incite an emotional reaction out of you so that you can understand, how would I feel if this went red, right? That's what I ask myself. So for me, I'm like, how would I feel if this turned around and went all the way against me? Like, I wouldn't feel very happy, right? I'd feel pissed off. So because I'd feel pissed off, I'm going to just take my profit, right? If you would feel pissed off, take the position there. Take the profit there, right? Now, second thing I want you to pay attention to is your R multiple, okay? So your R multiple is your risk to reward. But, and I've talked about this before, and I know one of you guys said this was your favorite lesson ever, but dynamic R multiple is very important, right? Your dynamic R multiple is essentially your risk to reward and how your risk to reward changes depending on where the position's at. So for example, here, let's say that you're in this position, right? But your target's right here. This is where you were telling me, Sean, should I hold? Should I hold? Should I hold? Look at how much you were losing versus how much you would make. Is that enough for you to really hold that position? That's the question. And if it is, then take it. But at the end of the day, this is then a 0.32 to 1 risk to reward, right? You're taking a 0.32 to 1 risk to reward trade if you hold that position all the way through. So it really depends to you whether or not that's a valuable position or not, right? Because this is your target. Your target is down here at this gap attempt, right? So the original position was here where we took this position. 4.3 to 1 risk to reward, right? Great trade. But when you trimmed off the position, and this is now where you're telling me, hey, should I exit this position or should I hold it? Well, you were potentially risking this. That's what you were risking on that. Now, I know what you're thinking. This could just keep going and going and going. But you don't even have a target set, do you? Like, you didn't have a genuine target set. Unless you set your target to here, in which you have to be realistic, is that going to be a successful trade for you? Maybe, right? If you're okay with holding that, then sure. But my full target for this position was right there. So if my full target was right there and I'm right here and I'm sitting there questioning, should I close this? Should I not close this? Well, then look at the dynamic R multiple. Look at your dynamic risk to reward, right? Your risk to reward changes throughout your position. So as this position goes on, it has a larger chance of flipping against you and has a larger chance of going red, right? So if you're right here and this is why I say, hey, sometimes just take it, bro. I don't care if it hits your target or not. Like, just take it. Because here's the thing, you could be like this. This is a 0.07 to 1 risk to reward trade, right? You can't give up the fact that, hey, this is going to be super successful. So I'm going to hold this, but like it has a large chance of flipping at this gap area, right? That's my target, is this gap area. So if I'm targeting that gap area and I'm right here and I'm like seeing slow price action, I'm seeing garbage start to happen, bro, I'm out of there. I'm not going to take that. That doesn't make any sense for me. Now, where it does make sense, and I'll break this down for you guys right now, where it does make sense, there's some levels on QQQ above us, right? This is where this would make sense. Let's say you take a position right here, a long position right here, right? Your target looks like this, okay? Now, let's say that this thing is going, right? It's going. You're right here right now, and you just trimmed off your first position, okay? So you just trimmed off your first position. And let me create some candles for you so you can figure this out. Ready? Boom, 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 boom. Right up to that target, right? So you're right here. This is now your dynamic R multiple if you have your stop loss at break even. So the question is, are you willing to hold this for a 0.45 to 1 risk to reward trade or not? Let's say you trim off here, or you trim off here. Let's say you're up. This is probably like what, 10% maybe? Maybe 15, right? So if you're up 10, 15% here and you trim right here, it definitely might be worth it for you to hold the rest of the position all the way to the target. 100%, right? Because if this comes back to your stop loss, you still are risking a 3.25 to 1 risk to reward. Okay? So if you trim here, you still have the ability to get 3.25 to 1 risk on the rest of the position. But if you trim your first trim here, right? This is now a 0.6 to 1 or 0.16 to 1 risk to reward. So what you need to do is you need to adjust your stops accordingly to keep it as a 2 to 1 risk to reward trade. In this situation, in this scenario, you can't even do that. So that's why I always recommend, like, you got to pay attention to your dynamic R multiple, because you have to keep a 2 to 1 risk to reward at the very least so that you can stay profitable in the long run, right? So let's say that this level just didn't exist. And this was your target. You enter there. Let's say that was your target. Now, if you trim off at 50%, let's say you trim off right here, for example, fantastic, right? That's super, super green. So what I would do is I'd set my stop below previous lows of the trend and let it go. And you can't be upset because you're like, well, I mean, this thing has so much further to run. Based on the chart, I think this should keep going, right? But if you feel that anxiety, regardless of whenever you're in that trade, if you feel that anxiety of like, should I hold, should I sell, should I da da da, I would close it. I would close it because that's the first one, right? So I said two things. That I said anxiety spikes and dynamic R multiple. If both of those things lines up, then hold that shit, right? If you're holding a position, you're like, I don't really care if this goes to break even or not, and you have a 4-to-1 risk to reward, ratio on that, hold that, dude, 100%, right? But if you've got 20 contracts and you're like, oh, I don't know if I should sell these, I don't know if I should, bro, sell it, sell it, right? Like, sell it. Don't think twice because your gut feeling is usually gonna be right. Now, when you do sell it, you just got to pay attention to, you have to be okay with the way that it goes, right? If it decides to go to 200%, you have to be okay with it because you have to imagine every single trade as a loss. You have to imagine every single trade starting out like this, okay? That went straight to negative 20%. As soon as the position went, it went to negative 20%. So when you're here and you're at 25% in the green, mind you, this is what your position looks like, right? This is what your position looks like. Next candle. Your position looked like this. If it looked like this, and you don't see any of the rest of the candles, you would think probably a good idea to probably exit this trade because we're coming towards my target, right? You see that we have a gap attempt down here, but you also see that we have this long wick. So you got to think of the trade at the point that you're at. You can't think of it as this is going to go to 100 million% because the reality is that you're not there yet, right? You haven't gotten there yet. So you have no idea what's going to happen. And for all you know, this is going to happen where you start chopping and theta starts killing your contract. And so right now, you'd probably be lower in profit than you were, 15 minutes ago when this thing just like rocketed your way, right? So those are the two things I would pay attention to. Anxiety spikes and dynamic R multiple. That's the way to get over that greed and get over that fear of, okay, I'm in this trade. Should I exit? Should I hold? What should I do? Right? That's exactly what I would do.